to explain some of the information that just came across my desk.
All right, ladies and
from
gentlemen,
somebody in the think tank.
this information came across my
this information
desk
came
here
out
in the think tank.
September of 2022.
It's directly related to AMC and GameStop and the Archegos short
here.
positions and swaps against them. I've seen this in the past, but I never took the time to correlate the specific dates of the swaps and the notional value of Archegos
AMC and GameStop
directly against AMC and GameStop.
Archegos
and somebody put it up
and
showed it to me that
we have
via the lawsuit
past,
from
never took the
from the CFTC, the Commodities Futures Trading Commission,
and the notional value.
It is now evident to me, thanks to somebody in our Discord, Red Velvet specifically,
and somebody put it up,
who showed this to me
and showed it to me, that
made me realize that the day
the lawsuit
before
from the securities
broker-dealers
the
prevented retail investors from buying
it is now evident to
any
me,
more shares of AMC,
Discord,
GameStop,
Red Velvet
Silver ETF, SLV,
who
and
showed
a dozen
this to
other
me
stocks.
Made me realize that
the swap contracts that
before
Archegos had
broker-dealers
were at a value
prevented retail
that I had never seen
from
before.
buying any more shares of AMC, GameStop, Silver ETF, SLV, and a dozen other stocks. The swap contracts that Archegos
I know you guys can hear me in here.
Were at a value that I had never seen before. Multiple lines.
I think I fixed it, guys. All right. I appreciate you guys letting me know. I'm pretty sure I got rid of the echo there. But if I haven't, just say the word, guys. Basically, Archegos swaps are reflected in the lawsuit from the CFTC, the Commodities Future Trading Commission. And now that I can get a chance to look at them, all right. Now that I can get a chance to look at them, I've realized, thanks to Red Velvet and the think tank, that on January 27th, 2021, the day before, broker-dealers like Robinhood, Webull, IBKR, E-Trade prevented retail investors from buying the stock for a period of several days. The derivatives notional value of the short positions and the custom basket swaps that Archegos had were at a level that had never been exceeded before in the records that we have from the CFTC, and had not been exceeded since. And that number comes out to $1,483,000,000 in total notional value from the custom basket swaps that Archegos had on January 27th. Now, I'll post that up here and I'll put it in the nested tweets for you guys to see in just a minute. But I went through this document and I went through every day. It goes from March of 2020 all the way through March of 2021. And even the next closest day, the next highest closest day to this notional short value. Right, you can see these are short positions. It says at the top. It was the next highest day was about half of this amount. So this shows to me that at its height, the largest short positions from Archegos in the swap baskets that they had were on January 27th, 2021. Now, correlation does not always equal causation. That is a fact. But coincidence at the same time cannot be ignored. And looking at all of the numbers over a period of an entire year, of over 12 months, for every short swap position that Archegos has taken out, it's very clear that AMC and GameStop, in this basket of heavily shorted equities, probably SLV as well, COS, etc., these other companies, were being massively shorted by Archegos. We already knew this. We already know this. We've discussed this many times. because it's public information, but I never knew exactly how much it was. And looking at these numbers, if you add them up, that's a short position of over $1.4 billion in notional value that they were hiding from their prime brokerages, from their broker dealers, in order to get massive, massive amounts of leverage. As you can see here, the 28th is not on there. January 28th is not visible as a swap date. And the reason being, probably because most people and institutions were unable to trade AMC and GameStop on the 28th. Again, because these broker dealers colluded with market makers, clearinghouses, and even, if you ask me, people directly in the White House to pull retail's ability to buy. I have seen reports in the past. This next 30 seconds is a little speculative, but I have seen in the past multiple people come out with not just theories, but actual emails from the White House going to clearinghouses requesting they speak together about an issue in financial markets. That was on January 27th, 2021. I have not been able to find those emails on Twitter since. So if you guys can find them, or if you have a copy of it, I know it's out there because I've seen it for years since then. Please send it my way, however way you can. My email address is marcelklinovic@gmail.com. The name is phonetic. But looking here, it's very evident that they did not make any trades in the swap baskets on January 28th, 2021. They made the largest number by far in derivatives notional value on January 27th, 2021. That is, in my opinion, a great deal of what caused the collapse of Archegos and what directly led to the bankruptcy and collapse of Credit Suisse. As you guys know, a lot of these swap positions remain active, still need to be rolled, and that is why UBS, when they bought Archegos, well, should I say when they were forced to buy Archegos by the Swiss government, requested that they receive $8 billion if their losses exceeded $4 billion on Credit Suisse. And it sure seems like that's the way things are going to go. I put up a tweet earlier today that showed that UBS is going to close 85 locations and leave 190. They did first report that in March. However, just today, we had the CEO of UBS confirm that. And they're saying that the merger between Credit Suisse and UBS and their cost-cutting measures are going to lead them to close 1/3 of all locations. So, ladies and gentlemen, I present to you right here directly the exact numbers from Archegos Capital Management with the swaps that they had in the baskets, in the heavily shorted meme stock baskets containing AMC, GameStop, and many others. For your review, I'll put it down in the description, the comments, and the tweet, the tweet on every single platform that you're watching me on right now or listening, for you guys to check it out. Because I think that this is absolutely huge information. Do any of you guys have any comments in it, since we're talking about it right now? But this right here is clear evidence, in my opinion, of something that we've known about, but we didn't have an idea of just how much. Literally, this is double the next highest number that they've had in basket swaps for any single day for the entire 12-month period. And I think that that's extremely telling. So as we were talking about earlier in regards to GameStop, what we're seeing now, and this reflects a direct correlation to AMC and GameStop and the reasoning behind the what these companies have. One second here. You guys hear me? Interesting. Okay, that's weird. But all right, I'm glad you can hear me. Thank you. Thanks, my man. That was one post that I put up. Oh, you get okay. That's the video right now, but I'm gonna put up the actual. Okay, there. You guys can see it there if you want to look around right now. But I'll post this actual website for all you guys to review. But this is one of the reasons why I'm most bullish on AMC and GameStop. The fundamentals of the companies are phenomenal. AMC's been in business for 103 years, paid down over $2 billion of debt in the last couple of years, has $500 million in cash on hand, more than that actually, and is turning to profitability with even fewer films than they had, during and slightly before the scandemic. GameStop as well posted a profit this quarter. They just posted a profit yesterday, as we saw in their earnings report, of $64 million, which isn't a ton of money, but that's still $64 million. That's a profit. It's nice. And Ryan Cohen is doing what he can to turn GameStop into a powerhouse. They now have $4.2 billion. And while I don't agree with the most recent share issuance of 20 million shares of GameStop that was announced yesterday, I still support GameStop and AMC wholeheartedly. Not to mention everything I know about the fundamentals, that leads me to the obvious conclusion that the stocks are extremely undervalued. I think they're tremendous value and growth stocks, and they've got incredible potential. And then seeing with my own two eyes, just one company out of the many family offices, broker-dealers, hedge funds, market makers, etc., that are short and naked short and rehypothecate and marry and divorce calls and puts and mark shorts as long and create tokenized securities of AMC and GameStop in order to manipulate the market, proves to me that not only are they tremendous value and growth stocks, but the potential for any sort of short squeeze is through the roof, unlike any I've seen before. Now, keep in mind, I invested in dry ships in the past during short squeezes, and that was tremendous for me. That really got me going in markets pretty heavily. And if you guys don't know about DRYS, you need to look up dry ships, and you're going to learn something about short squeezes. But here, this to me is actual, tangible, verifiable proof of what just one single family office had against AMC and GameStop, and why it collapsed that family office, and why it collapsed their prime broker, the bank Credit Suisse, and why that's going to lead to massive, incredible amounts of losses for UBS Bank as well. And they will receive a bailout from the Swiss government, from the taxpayers. And that's going to happen to multitudes of banks and prime brokerages out there. Banks are prime brokerages, such as Goldman Sachs and JP Morgan, each of which individually are the prime broker to over 1,000 hedge funds. 1,000 hedge funds. And they have numbers like this: $1.4 billion. No, I'm sorry. Hold on. Yeah, $1.4 billion in derivatives notional values. Short positions alone. These are their short positions only. I'm not talking about their longs. You can see this here on my screen. It's directly from the CFTC lawsuit against Archegos and Bill Huang, which you guys know he was put in prison for, and he was convicted of fraud for having done so. Because when you steal from the prime brokers, when you steal from the banks, you go to jail. When you steal from retail investors, you get a slap on the wrist, or nothing happens at all, like Vlad Tenev of Robinhood and all the other brokerages out there that pulled the buy button from retail, whether it be Schwab, E-Trade, etc. And again, guys, not to be continuously bringing it up, but it's things like this that have forced us to create our very own broker-dealer. And if you want to own a part of that broker-dealer through the Regulation C offering that we're doing, that we posted on the SEC Edgar website a couple weeks ago, we are giving you the opportunity to own the company. Because instead of going to these hedge fucks, we'd like you to own it. Because we could go to hedge funds, just like Robinhood or Webull. That's not the point. This is a company that's being built for retail investors by retail investors. And I hope that you guys will make a small investment in the company and understand that there are, of course, risks involved, but there is also a lot of upside involved, as well as many other perks and benefits. So I'll give you guys a link to that also at the same time. So if anybody else wants to chime in, by all means.
On Twitter or whatever, and you're hearing these people say, oh, it will never happen, or you might even speak, I have financial experts that say they won't let it happen. It gets to a stage where their own greed, contempt, and arrogance comes back and bites them in the arse. And that's why I say 2008, Burry give them 2 years warning, and he still couldn't stop it. They had all the rules, the tools, the Fed to print and everything else. It still went tits up, and that was just the housing market. So this is just one. You know, this Wang was just one family office doing what he was doing. There's no way he did that with the amount that he did without other people either allowing it or turning a blind eye to things that shouldn't have happened to get him into that position. So they will eat themselves. There'll be sacrificial lambs, you know, scapegoats. We don't want that. That's not what we're here for. We want the whole damn fucking herd. They're in a position now where they've already made their bets, done their naked shorting and everything else, and it's still out there. It's in your account, it's in my account, it's in all our accounts. So the games that they play and the smoke screens, and when have they ever complained about taking our money? I've never known it. If you're putting a bad bet, they love you because you've done money. Well, this time round, we trapped them, and that's what I honestly believe. And when I hear about you mentioning this, boss, about Huang,
just one,
and then that gets, you know, him taken care of, but then Credit Suisse take it over, that's sort of eating them alive, and then UBS, that's just one. So when people tell you, oh, it'll never happen, I think it is happening. CAT system coming in place, Andrew Left's now up on 370-year charges. It's nowhere near as quick as we thought, or we hoped, or we believed. And we like
1 second, folks.
Facts and concerns that people will take it seriously. That's why we're here, because they didn't with Darren Saunders, they didn't with Wall Street Conspiracy, they didn't with Susan Trimbaugh or Lucy Commercer. To every single bit of negativity that comes out. And if we're patient enough, we'll get to see it like Boss has just shown. Red Velvet, great post. Appreciate you, brother. To see it like Boss has just shown. Red Velvet, great post. Appreciate you, brother.
Go see a movie. I love it. Yeah. It just further reiterates to me everything that we've already known. And I think it's, even myself, someone who's done thousands of hours of research on the subject, is able to be excited. And this is literally nothing more than reaffirmation, or should I say affirmation, of things that we already know. But now I don't just have, now I have actual physical proof as to what the numbers are and what the numbers were. And this is something that just blows my mind. I'm going to tweet it out right now so you guys can see it. I don't know if anybody wants to comment on it or mention anything else about it, but that's about all I have to say about that. Like as Forrest Gump would like to say. This is something that just blows my mind. I'm going to tweet it out right now so you guys can see it. I don't know if anybody wants to comment on it or mention anything else about it, but that's about all I have to say about that. Like as Forrest Gump would like to say. I was just me just talking. Like, why?
first started speaking about it, was they your words or was you reading from a report?
And the report's been flagged up here. I know you've got it on YouTube and stuff. When I get a chance, I will sit down and read through it. But can you just go over the numbers again?
Yeah, basically, we're looking at $1.48 billion in notional value here, and that's the short positions that Archegos had in swaps on the 27th of January 2021 alone. So these numbers are massive, and again, that's just one family office, a relatively small family office compared to many others. You know what I mean?
For everybody regarding what you mentioned about derivatives.
Well, that's the derivatives notional value, which it means like the value of all of those swaps in totality. And it's somewhat of a theoretical or hypothetical number, if you will, because a lot of times they're bilaterally netted using the continuous net settlement system. However, that still doesn't mean that there's not a ridiculous amount of leverage there. So they're not going to lose $1.4 billion if this goes wrong, but there's still going to be a massive loss. And that's what happened. The loss was so huge that Archegos went under, and they took the bank with them, the bank that lent them money, under with them. And now, that bank, Credit Suisse, is at risk of taking everybody else with them. Bear with me one moment. If you guys can just give me a minute, I'm going to put this tweet out. I'm going to mute for a second. Under with them, and now that bank, Credit Suisse, is at risk of taking everybody else with them. Bear with me one moment. If you guys can just give me a minute, I'm going to put this tweet out. I'm going to mute for a second.
The reason I questioned Marcel, asked him to clarify the derivative side of things. Another reason is when you keep hearing that people say they won't let it happen, they'll stop it. It isn't just the fact they couldn't stop 2008. It's because Warren Buffett told them in 2002 the issue of derivatives being a financial atomic bomb. No one listened. No one stopped. I've actually just flagged up a couple of videos relating to 2008. I'm being nostalgic today, going back in time. Where he was, well, it was actually 2018 where he did an interview. There's some truth in what he has to say, in my opinion. It's just my opinion. There's a lot of PR in it, and I would hasten to add he does a fair bit of dancing to a couple of the questions. You don't have to look at mine. Just go on and go on YouTube and put in Warren Buffett 2008 financial crash, and you'll see the video for yourself. So you don't have to go anywhere near anything I'll do, or Twitter, or my account. Go and watch it. There's a couple of good videos there, and then start posting what you think about what's being told by our governments, etc. Dick Fold, who was the CEO of Lehman's, went to Warren Buffett in March of 2008. Now, there was discussions, but it wasn't fully blown regarding the crash that came in September. But he went asking for money from Warren Buffett and Berkshire Hathaway in March. The answers are out there for all of us about when people say, oh, it won't happen, they'll stop it, they'll this and that. Yeah, if you're a financial advisor, or you toe the line, or you're a hater or a bot. But if you're out there in the big bad world and you're just looking out for people and you're joining dots, now and again you've got to stand up. I'm standing up. Go and put in online Warren Buffett derivatives 2002 and read it. It's 2 pages, 2 A4 pages, statement talking about it, where he says derivatives are the financial atomic ticking bomb. Go and read it. 2008, I think it played a part. The market's going to crash. We're going to get hurt. People will get hurt. Because he even says it in them videos, if you go and watch them. The people that fucked up, the people that run the banks, the people that were the CEOs, the big well-known names, the respected people in the markets, they were shamed. But they walked away really rich. His words. A little bit of plagiarism now. Trying to keep it polite. Trying not to swear. Go and watch the videos. Join the dots. It hasn't got better. He even says it in that video. It didn't get any better. 2018, it hasn't got any better. They were allowed to walk away a lot richer. I didn't know I never got richer. I don't know about any of yous. Join the dots. When they tell you they'll stop it, they'll stop it. They can't stop it. If they could have stopped it, have we had market crash after market crash for decades? Because they can't. Their greed, their contempt, and they're not giving a shit about any of us. They don't pay the price we do. They'll position in the background. Why the hell is Buffett selling all his stock? Why is he selling all his stock? That's a genuine question that you need to know the answer to. Because he knows cash is king. And at the right time, he can go and buy Apple at 40% less than what it is. Maybe. 30%, maybe. 80%, maybe. But our pensions, our 401k, our investments, the stocks that we'll have to wait. And they'll brag about the 87 crash, 83 crash. And they'll say, oh, yeah, it bounced back in a month. There's no guarantees on bounce backs. The only guarantee we have when we look at the market is sooner or later it will crash. And when I look at the derivatives and the bonds and BRICS and everything Boss has talked about China and God knows what else that they're up to, and then add naked shorting and spoofing, and then add what Bigham's talked about recently, where instead of 19%, it's only 9%. When you add all the can kicking up, sooner or later it comes back and bites them in the arse. And that will be your neighbours, your community, our people, us, that will pay the price again. That's why we have to shine the light. That's why we've got to try and get eyes on it. And now, tonight, through this Wang release, that's not an if or a but anymore. That's a guarantee. Some of the other bits, you've got to join the dots. But there is nobody out there that any of us talk to should believe banks nowadays. Nobody. Even as busy as you are and as tough of a life as you've got and as insular as you're living, you should understand 2008 was created by them and we paid the price. What is it? $27 trillion on the GDP debt of the United States has appeared in the last 20 years. For the entire history of the United States up to 2004 was 8 trillion. Everything your country, America, had ever done leading up to 2008 was 8 trillion. 2000 they're just not telling us. They're just hiding it. Plunge protection team, Fed printing, the RRP. They've just got more tools to try and hide it and kick the can. They're not going to be able to kick it forever.
And to your point, I remember back in 2008 when Congress was freaking out because these banks, the top 1,000 banks in the world, or the 1,062 banks and holding institutions in the world here in the United States, basically, had around $80 trillion. Yes, you heard me correctly. I didn't misspeak. $80 trillion in total notional derivatives. And they were talking about how that was a ridiculous bubble, a huge, crazy amount of money that is at serious risk of collapsing the financial system. This was 2008, 80 trillion. And now I've pulled it up on the channel a bunch of times, so I'm not going to pull it up right now, but you can see clearly if you look up the Federal Bank and Derivatives Report, that number is over $430 trillion today in total notional banking derivatives value. Now, again, one thing I want to keep in mind to all the naysayers out there that say, oh, that's notional, that doesn't count because it's all notional value and it's all bilaterally netted in a continuous net settlement system. I give you this. Even if all of those were netted, there is not 100% efficiency. So even if there was only 85% efficiency, which there's not, because the efficiency numbers are also shown on that bank derivatives trading report from the Federal Reserve that you guys can find. If all you got to do is type that into Google, bank derivatives report, type that up and it'll pop up. It's usually a 46-page document, comes out every 3 months. And you guys will see that what they were freaking out back then about 80 trillion has turned into 430 trillion plus dollars of toxic derivatives that are at risk of collapsing our financial system. And even if 85% of them are going to be bilaterally netted and wash each other out, meaning that they won't cause issue, that's still going to leave trillions and trillions of dollars, which exceeds the entire GDP of the entire fucking world. The entire gross domestic product of the entire world is exceeded by the losses available to these guys if, or should I say, when the Ponzi falls apart. I'll leave you with that. Excuse me, I got to open up these M&Ms for my little baby.
Go for it. Just for those at the back, these derivatives, can they show on their reports as profit?
Well, they're there. They're not showing as profit. They show as. Oh, it's both, man. It's profits and losses, but it's all unrealized. Excuse me a minute. Let me get her settled in, and then I'll be right back.
No problem.
Boston here, dropping knowledge and being a daddy at the same time, man. Much respect to you, Wolfie, for dedicating your time here, man. I appreciate both of you guys, and I'm sure the room does as well. This is a lot of knowledge, man, that's being bestowed on us, and I'm hoping it's all sinking in, man. If you take a look at everything that's been presented today in regards to AMC and GME, I think it just reinforces what I believe and a lot of people will believe. These are great investments. No financial advice. It's just what I believe. And I believe that a lot of you believe the same thing, that we're the difference makers, ladies and gentlemen. We're making the difference, man. And we need each other. Everyone is playing a part. If you're out here hodling, man, you're playing the part. If you're out here, I always say this, man, be loud. Be loud about the information that's presented. Be loud if someone's at the movies, take pictures, take videos, like, comment, and repost those, ladies and gentlemen. If you really, really believe in these investments, man, support these companies.
Go see a movie.
Go see a movie, like my man Leo said. Thanks for being here, Leo. I know you're working, but whenever you're ready,
Real quick, I just wanted to add this. I pulled up the OCC.gov, the Office of the Comptroller of the Currency, on my screen here, and I'll tag it in the Twitter right after this. I'll drop a link to it. The top 4 banks alone, right? There's 1,208 insured U.S. national and state commercial banks and savings associations that hold these derivatives. And out of those 1,208 with 430 trillion fucking dollars worth of derivatives, notional value, the 4 largest banks hold 87.6% amount of that amount. 87.6% of that amount alone. Now, when I say 400 trillion, I'm including all of the world, not just the United States. In the United States alone, there's $206 trillion worth of these derivatives. Sorry, I misspoke a bit ago. I should have said 400 trillion is the world, 206 trillion is the United States banks alone, the 1,200 banks I just mentioned. And of that, 87.6% of that $206 trillion is JP Morgan, Goldman Sachs, Bank of America, and Citigroup, with Wells Fargo right behind them. That's the fucking mess we're in. And again, Goldman Sachs and JP Morgan are the 2 that are the #1 borrowers to hedge funds. Same kind of borrowers like Credit Suisse, which collapsed when Archegos family office collapsed. That is now owned by UBS due to these billions of dollars worth of basket swaps against stocks and baskets of meme stocks like AMC, GameStop, Silver, Silver ETF, SLV, etc. Oh, and by the way, before I forget to mention, yeah, I still wholeheartedly believe that we're going to be filthy fucking rich. Like all good things in life, the best things in life take time. And for me, if I have to wait, 3.5 years to get to this point, and maybe even a few more years from here, no problem. I'll continue to wait.
I'll continue to wait, baby. It's worth it, in my opinion.
I know one thing, I don't know anywhere else I'd rather be invested. And the haters and the knockers and the people that want to write the hit pieces, mainstream media, the banks, you know, people in government. This was my
Cheers,
chance to pay
motherfuckers.
them all back.